A very good morning, ladies and gentlemen. We are kicking off day 2 with an insightful masterclass on integrated compliance framework. This session will provide a deep dive into the evolving landscape of compliance in financial services, focusing on best practices for ensuring regulatory adherence with fostering innovation. Leading the session is Mr. Shashank Shekhar, co-founder and head of consulting at the Digital Fifth, who brings extensive expertise in fintech strategy and compliance framework. Ladies and gentlemen, let's welcome him on stage. Over to you, Shashank.
Thank you, Vinny. Thank you. Good morning, everyone, and warm welcome to you all to the second day of the Bharat Fintech Summit organized by the Fifth. I'm pretty excited for the day 2. I'm sure you would have had a great day yesterday. So we'll start with the regulatory compliance. I think this has become a part of the every banker today, right? In fact, many of the speakers yesterday could drop out because they have been called by the regulators, right? So regulatory landscape in the banking industry is continuously evolving and changing. And it's becoming complex day by day. But how do you figure it out that you're able to manage it pretty well so that at least it gives you a breather to focus on the innovations, transformations, right? So that's where that we have been working along with banks that how to build in a kind of an integrated compliance framework, which gives you a full view of that how do you are handling your entire the compliance requirements across the different regulatory requirements. Like, say, for example, in last 3 years, RBI would have released multiple master directions from the digital payment security controls to the outsourcing guidelines to the IT governance to the KYCs and all these multiples. Now, tracking these all the regulations and along with the multiple standards that you want to follow, right? Because you are running in a financial institutions like ISO 27000 for the security governance, PCI DSS. So these are the sessions, these are the framework when you are trying to deploy, it becomes Mehmet task. So those who are in the compliance, those who are in the technology, those who are in the digital will appreciate my concern. Not easy. So let's get started. What are we talking about? Integrated compliance framework. Okay, so we'll just spend a little bit of time that how the digital has transformed the entire technology landscape at the banks and the NBFCs, and how the fintech has come along during the process and trying to help the banks or the NBFCs to get compliance. So typically we have moved from the branches to the mobile, right? Where that everything has moved digitally on our mobile phone, especially on the individual, MSME, and all the stakeholders, right? So entire your products from the deposits to the loans and everything has moved. Entire customer journeys has moved from the branch-led to self-assisted to the self-service, right? Banks have invested heavily into the API middleware and the cloud infrastructure, which allow them to connect to the multiple parties. Now, banking has not left within the closed door of the banks, right? It has moved to the third parties at the clouds, third party as a fintech partners, multiple partners. So your compliance boundary has expanded. So that's where that entire the bank's technology has complicated the entire the landscape. Digital platforms continuously demands a 24/7 availability of the platforms, right? So earlier was the days like in case certain things goes down, still you can tolerate, right? It may not be impacting the large set of the customer, but today if you look at it, 2 minutes of your core banking getting down may have a massive impact on the UPI transactions, because UPI transactions are happening in a multiple into seconds, right? So that's where the challenge comes into that. And customer expects, customer doing the Swiggies at the 1 o'clock in the night, 2 o'clock in the night, and that time also you are expected to run your technology infrastructure completely going live, right? So I think that's where the landscape is changing. So we have a huge flow of the customer data. So customer data is lying across the board, right? Your multiple systems on the cloud-based SaaS platforms, your fintech partners, is everywhere, right? We have increased usage of the cloud. Bank may not be, or NBFC may not be moving their core infrastructure on the cloud, but they have started adopting the cloud in the form of the SaaS, like software as a solution. So many of the NBFC and bank, you'll find that their loan origination system may be running from the cloud. And they will be integrating backend into their systems in the data center. So cloud adoptions, the partnership has increased. Bank is like, now they're doing lots of the in-house development, but they are also focusing on the partnering with a multiple solution. All the people you can see, those who have put up and installed, banks are partnering with these players. And these are the new solution, right? Strong regulatory supervision, I think I don't need to get into that, but we all agree that I think regulatory supervision has increased dramatically over a period of time. RBI has started doing the seaside audits. Seaside audits are typically a very technology-driven audits, where that they will try to look into that every aspect of the technology, not only from the security perspective, but your performance, resiliency, every dimension is looked at it. And the complex risk management, right? In fact, last year itself, RBI released an operational guidelines for all the banks, NBFCs, and this is like mammoth guidelines that are almost 17 principles that you need to follow with multiple control sets. So from the third-party risk management, your fintech partnership risk management, your operational risk management, it can go on, go on. So that's where that you can see the landscape or the regulatory compliance continue to grow. I think risk arising because you have to do the lots of the risk reporting, capacity management. So this is another. RBI expects that your infrastructure is running 24/7 and it is designed to handle the scale. So look at the scenarios of the UPI when the transactions has exponentially growing almost like the 1000% of the growth, where that your backend infrastructure has to support that. Now the account aggregator adoption will continue to increase, that the load on the core banking is going to come. So that's where that you need to ensure that the entire infrastructure is there. So capacity management, 24/7 monitoring, cyber crimes and cyber fraud, I don't need to talk about it. It's become as a part of our day-to-day life, right? Many of the customers falling to prey to this cyber crimes, and the banks and regulators expect that you are taking utmost care to ensure that your customer doesn't fall into that. And for that, RBI is continuously increasing the guidelines. Like, so for example, if you look at the master direction on digital payment security control, it's a comprehensive guidelines that they are telling the banks to follow. They are telling banks to ensure that their partners follow, whether it's a switch partner, whether it's a payment gateway partner, anybody is all about. But the challenge lies about that you can't have the integrated view. So I would have listed down at least 4 to 5 master direction in just minimal. And then apart from that, you have a standard. You don't get a single view that how I'm complying. Every standard, every master direction will have at least 100 to 200 controls. Now 100 to 2 controls across the organization, how does it, you are compliant on each of the point, you may not have that kind of view. So we have recently times seen lots of the news cases. So what is why the impact of the compliance is high, right? Brand impact, brand reputation is pretty high. Prevent business and data loss. Now this is very critical. Like earlier, if you look at it from the regulator perspective, they used to have the penalties, right? Penalties in terms of the monetary penalties. But today's, how the penalty comes? They stop the business. We have seen in the cases, news, I don't want to take any names, but you have seen that cases where the RBI puts the embargo on the certain operations. Be it on the, you can't launch the new credit card, you can't launch a new customer onboarding through mobile banking and all these things. This is very challenging. It was a different era where that you can still go away with penalties, but now you are worried about that it may have a stoppage of the business. Investor trust, proactive and anticipated futures, these are the critical. These are some of the pointers that I've been talking about, right? So look at that from the banks or NBFC perspective. What are the compliance? And this is not exhaustive. So you have the master direction on IT governance, IT outsourcing, digital lending guidelines, the KYCs, credit card guidelines, then you have a digital payment security controls. These are master direction. But apart from that, banks also need to ensure that they comply with the certain SEBI guidelines, because banks are also helping the customer in the third-party product sales like mutual funds and stocks. They may have also IRDAI guidelines because they sell the insurance. So IRDAI guidelines also they need to comply with. PFRDA guideline, Digital Personal Data Protection Act, which is now around the corner, which has already been passed from the parliament. Now it has been released as a rules, and it's just a matter of time that RBI may start looking at how you are complying with the Digital Data Protection Bill. PCI DSA, SOC 2. So now from the RBI bank's compliance perspective view or the CEO perspective, if you try to look at it, they will like to see that, okay, how I'm faring on my master direction, or how I'm faring on the DPDA guidelines. He wants to have a single view. That, okay, my compliance level is 95%, 99%, what are my open risk areas, what are my open control gaps. He wants to have a single view, but it's very difficult. Even when the RBI asks for the compliance view, typically you try to go and try to do a reassessment of ISO guidelines or the master direction or IT outsourcing and give it a report that, okay, on IT outsourcing of the 100 controls, I'm complying on the 88, right? That's kind of a view. So these are the practices currently being followed. You have an individual policy framework. So each master direction, you'll try to have in a single policy view. IT outsourcing, you'll have IT outsourcing policy. IT governance, you'll have IT policy. Security, you'll have information security policy. Cyber security, you'll have cyber security policy. So multiple policies frameworks, right? Each individually, then you need to comply with. Single compliance review. So each compliance, so banks do the compliance review on the proactive basis, but always they will try to look at, say, each one is an individual. Okay, how I'm doing each one of the things. Complying with the specific vendor standard, governance structure will be typically different, compliance reporting requirement will be different. So these are the typically current practices, the way organizations try to respond to this compliance requirement. And that's where that we have been working with banks to try to bring into that integrated view, okay, so that at least you commonalize that certain elements from each of the direction, because each of the direction may be touching on the each individual aspects. Like digital payment will focus on the payments part, while the digital lending guidelines will focus on the digital lending aspect. But certain elements always remain controls. Common, right? Let's say, for example, security requirement, data privacy requirement. All these things will remain common to each of the things. So what we are saying that you need to have a very comprehensive, integrated approach to look at that all the compliance requirement. And that's where, like, so for example, pick up that all the best practices, align it with all the regulatory requirements, bring that all the standard and protocols, and try to look at the control mappings across all the three, and try to bring the integrated framework in terms of the policy, governance, reporting, audit, every aspect that you try to put an integrated view. This is just giving you the dimensions, right? I don't want to get into that, but you will have the security, different different standard, master direction, auditing. So banks will, how many of you who are in the bank, can you just raise your hand? And how many audits you go through typically? Multiples, right? So that's the kind of the scenarios, like say any technology guy you will ask, especially CTO, when I was having a conversation with a few CTOs, he said that almost 40 to 60% of his time going into that managing the regulatory compliance, because that's a universe is so vast, and it's wide spectrum of the diverse kind of the frameworks, right? So these were typical challenges. So why you need to have the integrated framework, right? It allows you to have a common framework, which gives you a benefit of the streamlined focus, right? So now one single view, and I'll try to represent that. Now you may not be able to correlate that. How does it look like? How does it? You will kind of visualize that kind of things that integrated, right? You understand the different master direction, different standard, but how do you figure it out? So, but it's try to streamline the compliance framework. Save on a resource cost, because you don't need to do multiple audits, you don't need to perform a different assessment according to the different checklist, map to each of the different standards, right? You'll try to do one single audit, very comprehensively designed, very comprehensively covered in the master checklist, and when you go and do audit, it's a single audit. So all the stakeholders go through a very few audits in terms of it compliance. Save on time, definitely lesser the audits. It's not only saves the time for the auditor, but save the time for the auditee. Now look at the scenario of an IT infrastructure guy, or say the product manager. If the product manager 30% or 40% times is spending on to respond to the compliance requirement or the audit requirements, his critical part of the product management time is going into a different activities, which he's supposed to not to handle. He needs to focus more on the product design, product innovations, right? Clarity on accountability, because you have a build and a master checklist, you will very clearly focus that each of the line items, who is responsible for, right? Enhanced transparency, because it will offer a clear view on the compliance status, and that definitely once you have a wider view of the compliance across all the different, it gives you kind of a different confidence level. Rather than looking things as the individual, when you look at the things as a holistically and the single framework, it gives you a good confidence. So how to go about it? Just quickly just touch upon, I will not go deeper into that. try to map each control requirement. So like, for example, at least minimal, you will have a 15 to 20 different standards, master direction. Pick out all the controls, okay, and try to map it that in different levels, that what are these, and try to bring out the commonalities. Like each of the standard, what are the controls are common. Then do that, based on that, you prepare your checklist, do the complete review, create a single policy framework, create a simple audit framework, create a simple compliance review framework, and dashboard. So that's where you will design, implement, and then go for the reporting part of it. So this is the way that things has evolved. Earlier it was to be manual processes. Most of the things used to be on a spreadsheet, emails, report. Now the GRC semi-automated governance risk and compliance tools has started coming in place, right? So that's started helping the entire bank or the NBFCs or the compliance teams to have a better view. Then you started having a repeatable processes. We are now reaching to a stage where that you can have a fully integrated, well supported with the technology. So this is that, I know it may be looking at a very complex diagram, but I'll just try to simplify that how the world will look like. I'll just give you 30 seconds to try to figure it out, this complex framework. So if you look at that one hand, you will have a different regulations, digital lending guidelines, outsourcing governance, and all these things. And you will have all the standards that, and as an organizations, as a best practices that you would like to abide by that, right? And even regulator push, like ISO 27000, regulator expect that you are compliant with ISO 27000 kind of framework. If you are handling a credit card data or the debit card data, you will try to look at that PCI DSS compliance is there. So ITIL framework and the cloud control and all these things. So you will have both the mapping at one end, and then try to bring it the common controls requirement like change management, incident management, audit. These are the controls which are there, which you will find into the every master direction or every control. So bring those common controls and then try to find out what are the deltas at each of the level. And using those delta, you create a common control framework and build a policy which can cater to each of these standards, each of these master regulations, right? Master directions. Have a single risk management framework. What is the risk management? You try to understand that what are the control gaps that you have. What could go wrong if the controls are not in place? And then what are the different risks are there? Simple principle. Identify the risk, and then you try to do a risk management part of it. But can you build a single risk management framework that all kind of the different gaps from the security to the IT outsourcing to the KYC risk and all these things gets embedded into the single risk management framework and gives you a review that what is my risk profile at the organization level. And have a single governance framework. What do you mean a governance framework? So to whom that reporting need to be go? Who are the committees that need to look at that? What are my control levels and all these things? So put up a single governance framework. And then also build an integrated audit engine. So one single audit, you go through the ground, you try to interact, you try to look at all the records and get the inputs and try to plug into your compliance checklist, which will give you that what is the visibility on your control compliance dashboard. So you will have a kind of a single compliance dashboard where across all the regulation, it will say that, okay, I'm at 60% compliance or 70% compliance. While at the same time, when you try to drill down, you can get into the compliance level at the individual standard or individual master direction also. So that's where there, and definitely benefits we have already spoken about, help you to better risk management, improve regulatory compliance, transparency, business continuity resiliencies, or all these things. So this is the primarily we try to design into that. So this is where typically you try to create a common control matrix. So you start listing down all the controls at one side. You try to look at these control systems, where all which master direction, which standard that you have, and try to find out all the deltas in between, and have a specific measures to respond to those individual delta that gaps is there, which you may not be covering individually as a part of the one policy and all these things. So bring out those delta as a part of the audit specifically. This is a continuation of same. Keep on control listing. So you may have like 500 control listing as a checklist. across all the 20 master direction is like 2 by 2 matrix that you will see, and you will see the different gaps are there, and that's primarily you need to specifically respond to those gaps that will ensure the compliance to those specific master directions. I think we have already spoken about. So maybe I'll just take a pause if any questions are there, any inputs are there. Okay, so let's continue. So we help them, so typically when we work with the banks or NBFCs, we try to help them to look at that what are the different compliance standards are required for them to map. They know that because RBI is always there behind that, keep on asking that, okay, show me the compliance status for this particular master direction. So they know that what are the things that applies to them, right? So now primarily we help them to identify, we'll start listing down the controls. We go and check that current compliance state in terms of the processes, in terms of the technology configuration, in terms of the security controls, and all these things we'll try to look and assess. And we'll understand that across that 2 by 2 matrix that we were talking about, where the green state is there, where the amber state is there, where the gray status is there. So that's where we'll check. Then we'll build a risk management, prioritize the control implementations, then build on a continuous monitoring framework, and then we'll continue. These are the details are there, so I will not would like to go. So this is there. So again, I'll have for any questions, guys, if you have. अभी morning में energy आई नहीं है. This morning has yet to build up. Or anybody want to share their compliance experience, their compliance challenges, how do they typically respond to? So this is typically really a challenge, like say for example, as now the bank scenarios is changing, right? You have a different stakeholders, like so for example, look at the bank and fintech partnership. Absolutely, it's gonna be part of the day, right? For the banks, NBFCs, you are not going to deny that, right? So being on the lending services, like today, if you see that anybody can book an FD on a platform like a money control, where on the back end side, you have on a different fintech, different banks. Like, so now you look at that, how many parties are there between the customers, right? You have you have a primarily customers, then the middle layer, that money control kind of a platforms, then you will have the backend, some guys who is facilitating the technology, and then on the backend you will have the banks. But entire all the layer, bank is responsible to ensure that compliance is being maintained at the middleware level and money control platforms level, right? Or any third-party platforms. So that's where the compliance requirements continue to get very complex, right? So you need to have the visibility of the control at that third-party platforms level, as well as the middleware technology platforms level, right? So these all the integrated compliance framework not only helps you to design that control aspects which you need to cover from your all the master direction standard for the internal consumption purpose, but at the same time also it start giving you the visibility that how you have passed on those control implementation at the third party platform, which you are anyway responsible, especially in the lending cases and all these things. RBI is not going to worry about that, okay, how the partner is ensuring about the controls and all these things. They will be worried about that how you are ensuring that the compliance requirement has been implemented at the third party platform. So that's where the compliance, integrated compliance framework kind of review that gives you good visibility into that. Yeah, so if no question, I'll take a pause, okay? And maybe Vinny or somebody to take over.